Wonderful. Hello, everybody. Hope you're having a good kickoff to the summit and have enjoyed the morning sessions. So myself, Jeet Bhatti, I do see some familiar faces in the audience, so I know a lot of you might already know me. But a quick introduction, I'm CEO and founder of Fathom Foresight. What we really do is help financial institutions plan, align, and execute their strategies around future to help them understand how the future is unlocking, where their competitors are hedging for future, and how they can win. So with that, today's session, and I know some of you have attended my sessions, they are heavily loaded. It is as well today as well. But what I'm talking about today is slightly different. I'm not going to go deep into one topic, but we are going to talk about a system and how that's shifting in Canada at this moment. So I think we have passed a phase in Canada when we should talk about open banking in one room and RTR in another room and stable coins in another room. We've had multiple events over past few years, Open Banking Expos, Payments Canada itself, and many others where we've talked about these things individually. And I feel all of us, if not well, versed and have a lot of knowledge about it, but also kind of bored. We want to see action, and we want to see that soon. And even within the organizations, we are seeing siloed teams and initiatives being run. So there's an open banking team, and there's an innovation team that sits separately. There's one that's going to look at what's happening with the RPA and the 1,500, sudden onslaught of players who will suddenly have access to the payment rails now. But nobody is talking about how do we plan for a future where all of these things will come together. And that's what I'm going to talk about today. So we're going to move the discussion from innovation and siloed initiatives to a system transformation. So as I said, we do have a lot of discussion around AI. I think that is one of the most talked about topics, not just in Canada, anywhere you go around the world, any summit or conference related to financial services, AI is the topic. But we got to understand there are lots of other forces that are in play, and specifically in Canada, they're all coming at one moment in time. So in Europe, we have had open banking for a while. In India, we have had open banking as well as real-time payments for a while. And now AI is making its impact on top of it. But here in Canada, we have some of the biggest, most disruptive forces ever in financial services launch exactly at the same moment, let's say. So AI, real-time rails, hopefully coming soon. Open banking, fraud and risk controls that are being announced at the federal level, and then stablecoins. We now have officially a Stablecoin Act in Canada, commendable job at the government level to actually move that pretty quick. But now let's try to understand how the world is going to look like, how Canada is going to look like when all these forces actually are full in motion, there's wide adoption of all of these. So that's the frame for today's discussion here. Essentially, my main message to financial institutions or other institutions, corporates sitting here is, don't think about the innovation in the sense we used to think 5-10 years from now. I think there's a need to shift that focus, and we need to shift it to system transformation. So it's no longer about who can move the payments faster, who has the best app, who has the best onboarding experience, the best lending journey, and so forth. I think let's move beyond that, because if you're stuck there, you are bound to fail and actually fail to the competition in future. What we need to think about is who is going to control intelligence, who will own the interface that your consumers have started to use, who will access the infrastructure that is being built in our economy right now. And lastly, one that controls all three will obviously be the one who benefits and towards whom the value will move as well. So the stake here isn't about the features and innovation, it's about the future power structure and where these control points actually sit. So the first shift that I want to talk is the customer behavior. So customers have already moved. I'm not talking about, in future AI will come and your customers will be doing this. It's already happening, and they're no longer starting their financial journeys with the banks. There used to be a time where they would go to a branch, they would talk to their financial advisor, maybe a call center, maybe an underwriter for their mortgage, but that's not happening anymore. They're going for, they're doing discovery, they're taking their financial advice, comparison from a lot of different platforms, the number one being AI assistants. And there are other as well, certain platforms and ecosystems like Shopify and other, where the businesses or consumers are highly entrenched because they are using those in their day-to-day lives, and hence the right moment is captured on those platforms as well. And they are advising the Canadians as well. But I think the biggest interface shift right now is AI assistants. So your customers are starting with AI. The point of influence has already shifted. Just by show of hands, how many of you go to ChatGPT or other LLMs instead of Google now for any typical search? Perfect, almost more than 80%. And that's kind of what we have, it must have been less a year ago, and that's what we are seeing in financial services as well. So in the US, 55% of the population has been reported to use ChatGPT and other LLMs for financial advice. In Canada, the 33% number is actually from 2024. So right now, I'm pretty sure it's much bigger than 50%, but it was only about 5% in US a year ago. So that's the amount of shift in customer behavior that we have seen in 1 year alone. And AI is just getting started. We are right now sitting at a very nascent stage, and we're already seeing these kind of impacts. So people are asking ChatGPTs of the world, how should I budget? Should I pay down my debt, or should I invest this money? What mortgage can I afford? Which credit card is right for me? Which account is right for me? And that's the layer where you want to sit. You want to make sure your products, your services are in that recommendation engine. And right now, I can say with confidence, none of the financial institutions are optimized to be recommended highly on these LLMs. And as we see this shift in customer behavior, we are seeing the influence shift. So the advice, when it moves, the trust is moving. And it is moving away from financial institutions. When discovery moves, the choice architectures are moving. Infrastructure is moving, and hence interface is moving, and hence the engagement layer is moving away from you. And when the decision moves, that's where the biggest hit comes, the revenue moves. So I think I'm gonna talk about all of these in detail so you understand what are the strategies that you can start to implement to stop, or at least ensure that the value doesn't move away from you, it moves towards your institution. The next shift that I want to talk about is the snipers. So I think the way competition has been viewed in financial industry for a very, very long time did work probably 5-10 years ago. But right now, when we look at the lens that you have for competition, it's entirely wrong. Everybody's looking into the mirror. So bank versus a bank, credit union versus another credit union, or maybe a bank. And then FinTech versus incumbent has been a conversation for the past decade. And it still is, but I feel it's archaic. We have moved much past that phase. And I think you need to refresh your competitive lenses. So banks should look at ecosystems, the companies that have a huge amount of data, they have huge customer adoption, already have amazing technology, beautiful AI capabilities as well, and they're integrating, embedding financial services into this. Credit unions should look at similar platforms as well. You need to look at the AI interfaces that are changing how customers actually discover and compare your products. So that's the right lens you need to look at, and that's the first point. If your strategy is built on what the next big six, or what the next big six move is, or what the other credit union is doing, 100% guaranteed, that strategy is bound to fail considering how fast the market is moving. None of us is actually building products, is implementing strategies at a rate at which the consumer behavior is changing. So it's almost impossible to match that, but we can predict the future so that we can plan and align and execute accordingly. Oops. Sorry. Okay, so the snipers, why I call them snipers? Because they are not the companies that launch and say, oh, we are going to be the next big bank and we are going to build a huge banking infrastructure and whatnot. These companies silently insert themselves into financial moments. So it's not a frontal assault on the banks, it's precision strikes. They find the moments where the customer is looking for a financial product and they embed that slowly into their journey. And once they have actually accumulated enough of these financial moments on their platform, they tend to actually come out at banks and actually become a whole financial ecosystem. Not a bank, but replicating every single product that you offer to your customers. And some of the examples I want to talk about, Shopify I think is the best beautiful Canadian example to see here. They started with owning the merchant workflow, the e-commerce workflow, enabling businesses to set up their online shop. Payments was the next, I guess, best product that they could offer, very much natural in the flow of merchants in e-commerce. And then they started to gather data on these merchants. So they had enough data that they can now adjudicate, they know the risk, and they can offer capital to these businesses. So lending became a perfect next choice. And once that happened, slowly they knew that these customers who already are using all their products, they're on their platform, they would well be offered a banking account, a credit card, a bill payment tool. Let's help them with their taxes and compliance as well. Spend management. So that's actually what right now Shopify does as of date, and I'm sure they have big plans for future as well. But nobody knows who's the bank behind them, who's lending that money, whose balance sheet those loans go into. The customers don't care, the businesses don't care, as long as the capital is provided at the right time, the right moment is captured, they are all good with it. But the only the players that are being disrupted here are the financial institutions here. So we need to understand that financial services need to be embedded where the need arises, where the moment of financial need is. Apple, I talk about this, and this is whenever I talk about this is like, oh, Canada doesn't have Apple Card, Apple Cash account. But let me tell you this, I think it's only a question of time. But once that happens, the adoption is almost instant. Canada is one of the largest users of Apple product around the world. And they do own this infrastructure of Apple ecosystem, whether it's a phone, a MacBook, the watch and whatnot. So, which is already a very connected ecosystem. Once they start adding products, financial products on top of it, the adoption is massively fast. To give you an example, about 2 years ago, they launched Apple Savings Account only for US customers that had Apple credit cards. So only US, and that too only for customers that have Apple US card. Within first 3 days, they had 1 billion in deposits. Within first 3 months, 10 billion in deposits. That's the money that actually went away from bank accounts into Apple's savings accounts. So that's the kind of disruption I'm talking about, and that's why I call these snipers. They are not slowly building products and advertising products and their savings account, high savings account, and so forth. They come off at the right moment, launch a product which instantly takes away the market. So the pattern that we are seeing with these snipers is owning the interface, owning the workflow, being in the moment when the need of financial services arise, data which is a big part, especially when you're getting into a field where you are predicting financial services, where you're predicting what your customer would need to do next, before even the customer actually thinks that I need to take this next financial move. And then the recommendation layer, of course. You need to understand that the interface has moved and you need to be in that interface. You need to be one of the top recommended products in order to win the market moving forward. Okay, now this is the most important part, I would say. The 3 battlefields that we are getting into, and that's the main system shift, and that's where we need to win if we build the right strategies. So first is intelligence, then infrastructure, and value. So what is intelligence? Right now, what we are seeing is that the system has been pulled apart already. Banks used to have customer relation. They were the advice points, helping customers decide which financial product is right for them. They were controlling payments, money movement, deposits, capital lending, everything. All of that has been disrupted, contested at every single layer by, again, snipers. And that is happening at a much faster rate. It did actually happen throughout last decade, but over last couple of years, and next 24 months, I think, are very crucial, considering how AI is evolving. So this will be something that you need to think about as you think about your strategies and roadmaps for next few months. But all of the layers have been already pulled apart, and that's why these 3 battlegrounds will help you at least align your strategy in the right direction. So first is intelligence. Basically, who decides which financial product the customer gets? Which is that control point that controls this decision? Second is, if we know that this is the product, who actually enables the delivery of that product? Who has the access to the infrastructure to do that? And third is value. So if you know that this is the product, this is the company that's providing it, who the value then flows to, who benefits, who makes revenue out of that. So control on these 3 points actually determine the wins in the future. Let's look at the intelligence layer. So who decides right now, whether it's the financial advice, comparison of the products, risk decisions within a bank, fraud decisions within a bank, credit decisions within a bank. So I'm not just talking about B2C decisions, like decisions for your customers, but also your internal decisions as well. Because AI is not about just offering the best out there to the customers. It's also about reimagining your bank. I was reading this interview by the CEO of JP Morgan Chase, which obviously I think is the most innovative bank out there in the world, the largest one. And he said probably all the jobs, obviously now that is a fact, all the jobs at banks will be impacted by AI, but how many people will we lose? And he said probably I don't need 10,000 people anymore, but I would at least need 2,000. So that's the kind of impact that is going to come internally within a bank as well, and that is where you need to build the intelligence layer, internal as well as external as well. And why this is important, I think it's needless to say. Where the decisions are made, where the influence sits, is actually upstream of revenue. So when you decide and who helps you decide which products you're going towards, ultimately it leads to upstream of the value. I was talking about JP Morgan. So they just announced 19.8 billion, which I believe is close to the profit RBC made last year. So that's their entire budget for this year for technology. And that is huge, and I don't think it's a surprise. They are building the biggest and the most innovative bank in the world. And most of this budget is actually allocated for AI, which is obviously will help backing it with data and cloud infrastructure, cybersecurity, and other infrastructure internally as well. But AI is a key theme of where this money is going to flow. So it's not about how fast you're adopting. I think it's understanding that the investment you're putting towards AI is going into the right channels, is being embedded into all the decisions that are being made internally within a bank as well. So you need to reimagine your systems internally as a financial institution as well. Next, the infrastructure layer. So who gets access to enabling the delivery of financial products, whether it is moving the money, how the data is moved, how the identity is verified, how the risk is managed, how participants within the ecosystem connect. which is usually, when we talk about this in Canada, it's talked about like a plumbing project, so APIs, and, I need to partner with somebody quickly so that I can, access the open banking rails. I need to have those open APIs quickly deployed. Nobody's talking about how that's actually move in the system, how that's going to benefit you, where will the value flow, how will you position yourself so that the value actually flows towards you, how will you monetize open banking for yourself. And I've been to a lot of discussions where lots is being talked about the plumbing part, the technical standards and whatnot, but there's very little discussion on monetizing open banking and other initiatives in the right way. And that's where the actual power is. And maybe that's the reason it's not being talked about in open rooms. For Canada, I think it's a big reset overall as well, because we are looking at launch of RTR very, very soon. In addition to open banking, payment initiation enabled by open banking has been announced to be launched next year as well. RPA, over 1,500 payment companies have actually registered and under Bank of Canada, and over, I guess, 800 already approved to access real-time rails when they are launched. Stablecoins, again, nobody is talking about how stablecoins will move the money and what impact they can have when they're programmed into a software which is enabled by AI. And I'm going to talk about that in a minute, but I think just saying that, we get an idea of what a world that is going to be. And then, of course, fast-tracking the banking license. OSFI just announced they have launched a fast-track banking license approval framework for FinTechs, credit unions, and some of the stablecoin players, so you no longer have to wait 6, 7, 8, 10 years to get a banking license within 12 to 18 months, I believe. If you're FinTech, you do have a possibility of getting a banking license in Canada. And together, when we see these together, these are not initiatives. This is not plumbing. This is opening the access. And when that happens, there's a huge amount of competition, huge amount of players that are going to enter the country, which is good for the country because it will lead to innovation and better products. But I think the financial institutions need to think about this very, very strategically, because there's lots of competition coming through these new infrastructure resets. To give you an example, I think Brazil PIX is a perfect example. It's a RTR initiative that was launched. And when it was launched, it was supposed to be a faster movement of money within the country. But what happened is, of course, it led to faster movement, but it changed customer behavior. So it's not only tech-savvy customers that like to use different apps and wear Apple Watches. It's everyday consumer who started using this. And this has become a normal way to transact money around the country. They have over 79% of the population using this technology already. And 16 trillion has been moved through this, which is actually 7x of Brazil's GDP. So that's the kind of impact the infrastructure resets can make. It can change the consumer behavior faster than we think and we can predict. The other one, my favorite one, is India Stack UPI. It's been there for so many years now. A lot has been talked about it, but I think the UPI, which is their payment infrastructure, it sits as part of the entire India stack, which includes open banking, it includes digital identity, consent-based data movements, real-time payments, of course, as well, which has impacted every single business in the country. And when I say every single, it's a small mom-and-pop shop probably outside your house. Nobody uses cards anymore. It's the QR code-enabled payments that are being used even at the smallest merchants shops in the country. And there's tremendous amount of innovation that has happened, a lot of new players that have entered the space, and a lot of innovations at the banks as well. So it's not just benefited other non-FIs, but even the FIs have built some really beautiful experiences using this stack. Next, which is the most important one. So if we know who decides and who is enabling, who gets the access to the infrastructure, who will gain the most revenue, who is the player towards whom the value will move. And I think these are the customer interfaces, the places where your customers are going when they're starting their financial journeys. The platforms that actually own the workflows, the likes of Shopify, Stripe, and so forth. Other payment orchestration players, embedded financial moments, whether it's Uber, slightly very very quietly inserting Uber wallet when you check out on Uber, instead of choosing your credit card, why don't you put money into a Uber wallet? We'll give you a 5% discount. So moments like that is where slowly the value is eroding and towards the players where the value is going towards. So the question is not what you provide, what products you offer, but what we are talking about is to understand your position in the value chain and where you sit overall. And why this is a battleground? Because banks would think, okay, we still do important job, which you do, by the way. Nobody can keep money as secure as banks, I believe. Again, I'll go back to JP Morgan. I think I'm a fan of the CEO. He was talking about that every single day, there are 3 billion fraud attacks that the bank actually cancels out. And I think only an institution of that size can protect your money like that. So you are providing important services like holding the deposits, funding the loans, processing payments, managing risk, trust, of course. But it's not differentiated. And I think the future is moving towards a place where if you're not differentiated, you won't be the customer interface. You might be the back end, you might be part of who sits at the back, but you might not be able to retain your customer relationships. And that is the invisible infrastructure risk, because if you're not controlling the first interface, that means you're sharing revenue upstream with other players. Stripe is a beautiful example when we look at how you can create value without having a balance sheet, without building a traditional bank. So they developed developer-level payment infrastructure, which then moved on to embedded payments. Then they launched open APIs to actually embed any financial product, lending, capital, and so forth, into any platform. Doesn't have to be a bank, doesn't have to be a fintech. If you are a platform that provides workflow management for a gym owner, you can embed financial products into it. And they have gone global in a big way, 1.9 million total volume processed over in the last year through their platform. And that shows that you can get value and generate revenue without building a traditional infrastructure or without having loans on your balance sheet. And the next layer, which is going to impact the value in a big, big way, is stablecoins and programmable money. Canada, as I mentioned earlier, has done a commendable job on moving forward the stablecoin act in the country. And I think just yesterday, Tetra Trust announced their first regulated stablecoin, CAD-backed stablecoin in the country, backed by a financial institution. And why this is happening so fast? Because world has already moved to a level where total global transaction volume done by stablecoins last year overpassed Visa and MasterCard combined. That's how huge it is. And that's why Visa and MasterCard, and I know there are Visa and MasterCard present in the room, several initiatives launched around stablecoins by both the companies. But that's the kind of disintermediation, or let's say disruption, stablecoins are causing. And there are some clear benefits to it, which is cost, 90% less cost when you move money across borders, automated treasury, machine-to-machine payments, which is going to come very soon overall. And then liquidity and other risk management components that goes into it, because it is part of the software layer. It's not just money that enables movement. It carries data. It is programmable overall as well. So how do these three battlegrounds actually connect the intelligence, that is basically who decides, infrastructure, who enables, value, who benefits? So imagine a world where you go to your AI agent and you ask, I have these $1,000, what is the best way to put this to use for me? Your agent is going to link into your different bank accounts, investment accounts, Wealthsimple, Coinbase wallet, wherever you hold your money. It's going to use open banking based data to understand what your total financial overall net worth, your overall condition looks like. Then it's going to suggest maybe move $500 towards a debt that you own, so you end up paying less interest on it. Another 300 maybe invest in a particular cryptocurrency, and another 200 for another thing, maybe a goal towards your travel maybe. And that's going to be moved into these different pools using RTR. So the money actually moves instantly, the decision is made instantly, and the platform, which will be the bank, hopefully, that fulfills this need instantly as well. But who captured the value here? Was it the bank? Was it the interface? Were there other intermediaries in the process? Definitely there were. That means that bank will lose value, will lose transaction economics through these other players in future. And that's what we need to control for as we build our future strategies. Okay, so, and I know I'm almost at time, without going too deep into this, I think I've already talked about this, but you need to look and understand, one of the most important takeaways, you need to understand the interfaces where your customers are going to search products, where they're going for financial advice, and ensure you are present on those interfaces overall. Quickly, I know I'm up for time, and AI evolution has happened really fast, and I think I don't want to talk about generative AI at all. We are already in a system where AI agents are present in financial services. There are FinTechs that are already enabling people to generate their AI agents that can help them get best insurance out there, that can find the best investment product. But think about this. Right now, if there's an agent that you can, call out to order your groceries, and it says, hey, do you want to order your groceries from Walmart app or Uber app? Does that matter to you? You'll be like, no, whosoever gives me the cheapest delivery fee, just order my groceries from there. But think the evolution of that towards financial services. If your agent, you tell your agent, invest my money, and does it matter which bank account, which Wealthsimples or FinTechs of the world should I invest that in? You'll be like, no, just give me the best rate out there, the best interest or dividend that I can get on my money, and I'm okay with it. And what is stopping, OpenAI to open a bank account behind them? Put all the money that through ChatGPT could go into a bank account owned by OpenAI. Think about that for a moment, and I'm going to leave you with that. Our session will be available online. If some of your members you want to share it with your team members, it will be available. I do have my QR code on the last slide. If you want to reach out later, book meeting, happy to help. Hopefully this resonated, and thank you very much. Thank you.